Good evening, everyone, and welcome to the special show, The Big Sell-Off in You, with me, Avan Dabash, right here on ET Now. Today, we want to address what mutual fund investors should do in light of the massive sell-off that we're seeing in the markets. Is it time for you to pull out? Do you just sit put? Are SIP flows going to be affected? What should be your stance? And should you be hitting the panic button or not? To assuage all the concerns and, of course, give a lot of clarity to a lot of your doubts and questions, Kalpesh, Ashar, certified financial planner, as well as Raunak, Onkar, research head at PPFAS Mutual Fund, are with us on the show over the next half hour. Phone lines are open. If you have mutual fund related questions regarding the market sell-off, please feel free to dial in. Thank you so much, gentlemen, for taking time out and joining in. I'm just going to get to the basics, if you will. At a time like this, when we're seeing these deep gashes on the screen, it seems like fear has really returned. We're caught in a perfect storm. It's the IL&FS issue. Macroeconomics aren't working. FI flows are continuing to pour out. And the markets have retreated over 15% from their all-time highs. I'm going to start off with you, Raunak, as to what should be the ideal position. What should one do? What should a mutual fund investor do at a time like this? Because it's very common for one to just hit the panic button and say, just let me pull out.
Understood. So fair question. So what mutual fund investors see is the red on the screen, and obviously the response is to, can I sell off now so that it will not bleed further. The point is, if you have chosen the investments properly, and the vehicle itself, the equity investment vehicle itself, is a long-term vehicle. So you make sure that you invest for the longer term and you have a goal in mind for which you are investing. So if that goal is still in place, and if your target goal for investing and saving is still in place, I don't see a need to panic. In fact, you can actually add some more money to the investments you have if you have surplus funds available, or if you need a desperate need of cash right now. That's the only reason why you should sell. Otherwise, just stay put. I don't think there is any need to panic.
No need to panic, stay put. And is that a view, Kalpesh, that you would concur with when one is looking at complete red on the screen? Does it make sense to just sit tight, especially if the goal is long term?
Yeah, very obviously, and that is the obvious answer which would come from any financial planner. But the welcome part of this is that the good part which we are seeing is that even the investors now, the mutual fund fraternity or the actual retail investor has come a long way. And since the last collapse, which we probably saw 10 years back, a major Lehman Brothers type of a crisis, since then I feel the investor has evolved a lot, and a lot of maturity has crept into the mindset. And that's thanks to a lot of awareness which has been given to them. So right now, even as we speak, we are seeing that although there is a complete bloodbath on the screens, there is no real panic among the retail investors to stop their SIPs or pull out large chunks of money and look for alternate investments. So, so far, although the outside scenario is very bad, but the mutual fund investor is holding his own.
Exactly. That really seems to be the voice that most of the market experts are echoing. And I'm so glad that you two gentlemen as well seem to be advocating the same, that at a time of panic, one should just really sit tight. We have a few questions and queries as well that we will address, and as well as our email ID, it's themoneyshow@etnow.tv, and we have a live caller number that you can call in too. Well, Mrs. Nagpal has written into us, and she said, I started investing in equity funds about a year ago, and my portfolio has grown quite handsomely in the last 1 month, but now it's in the red. But of course, she says, I don't know what I should do. Should I stop my SIP? Should I withdraw my money? Or should I continue to invest? Could you please advise? Raunak, classic situation. Of course, the markets were doing brilliantly just a few months ago, and now with the kind of sell-off, everyone's hitting the panic button. What do you think an investor like Mrs. Nagpal should do? She's invested in equity funds, she says.
Just to put things in context, for the last 1 year saw an unprecedented growth in the way some of the mid caps and small caps have moved. And that kind of move is very rare in the market. So when you get euphoria, everybody's portfolio suddenly became green and were heavily in profits. And that kind of happens in the market sometimes, and at the same time, even the opposite can happen. The portfolios can also go down in value when all these euphoria just disappears, because the inherent issues come out in these stocks. So let's not go into complicated discussions about stocks and businesses. The point here is that if you have a goal in mind, 1 year is not a long enough timeline to look at equity investments. So generally we tend to advise our clients that look at equity investments as minimum 5-year kind of an investment horizon, so that you are aware of a market cycle and you can ride through it, and your goals will not be interrupted because of a market slowdown or a market crash.
Okay, that's the take coming in terms of your time horizon as well. It's a little difficult to judge. You need to be a keeper in mutual funds if you're investing for the long haul. Mrs. Nagpal, I hope we were able to answer your question. Remember, we have a live call-in number. You're getting free advice as to what you should do with your mutual fund portfolio. Please feel free to pick up the phone and dial in. Raunak, Onkar as well as Kalpesh, Ashar are with us on the show. Next question from Sandesh, as you can see on your screens. He says, I've been investing in diversified equity funds for over 10 years. I've built up a large corpus for my financial goals. He says, I'm a moderately aggressive investor. With the crack in the markets, my portfolio is losing quite significantly. Should I avoid mutual funds and switch to fixed deposits? Is he really jumping the gun right now? Because he has been very patient. He's put his money, Kalpesh, in mutual funds for the last 10 years. I'm sure that's reaped him some brilliant returns as well. But like I said, at a time like this, one tends to get a very panicky, especially because it's not a calibrated sell-off. It's one where we're seeing the market slam dunk. What advice would you have, especially because one thinks that the traditional good old fixed deposits is at least a safe avenue? What would you like to tell him?
Sandesh, I think the question which you've put forth, it automatically signifies that you're a seasoned investor. And 10 years is not a small term which you've invested in the market. So I think by now you know that long-term investment reaps a lot of benefit. And when you call yourself moderately aggressive, it's a bit of a contradiction. But even if you are a moderate investor or an aggressive investor, 10 years will give you good amount of money compounding wise. Now, once you say that the markets have cracked, it's human nature that nobody would like to see their money getting eroded. But here, what comes into the picture more prominently is your actual purpose. For what purpose have you invested? Have you set yourself any financial goal? And if your goal for which you've been investing all this while for the last 10 years and have never booked profits, and hypothetically, if your goal is still another 5 to 10 years away, I don't feel there is any amount of panic which should set into it. Stay put. This is a period of a little bit of negativity which you are seeing. Nobody can say when this gloom can end. But if you don't need this money in the very short term to attain any of your goals, then stay put. But on the other hand, if you are genuinely looking at a purpose which you need the money in the next 1 or 2 years and you've set a target, then you might as well pull this money out because you made a handsome amount of money and temporarily park it in a fixed income instrument and achieve your financial goal.
Okay, so no need to press that panic button. You know, you've been an investor for the long haul. It's reaped you good returns. And as Kalpesh told you, it depends on your goals. It depends on your need for money. Based on those needs, you can look to redeem money or not. If you don't require the money right now, please stay put in your mutual funds. We have a live number that you can dial into and ask your mutual fund related queries regarding the big sell-off. You can email us as well on themoneyshow@etnow.tv. Well, you know, I just wanted to, Raunak, talk a little bit about the SIP flows. You know, the markets do seem to be concerned whether or not the SIP flows will sustain or not. Historically, we've seen that a lot of retail investors have turned cautious when we've seen a correction. There is that risk of SIP flows slowing down. And we have seen in the last 2 years as well, the SIP flows to a certain extent have neutralized the FII flows. Do you think one shouldn't really be worried because the DII still, seem to be on a monthly basis putting in fairly decent sums of money? What is the view when it comes to the SIP flow situation, Raunak?
Sure. So I think SIP is a very interesting behavioral tool. So just like we are seeing panic in the market when the market is red, in the same time, when the market is green, everybody is very joyous and happy that their money is growing. I think SIP kind of insulates you from the too much of a euphoria and too much of a gloom, and it allows you to invest steadily. So my point about SIP is that it's very hard to really predict whether flows will be sustaining or not, or how people will be investing going ahead, because all these moods tend to change as the market has moved, and we have seen that in past cycles as well. So instead of predicting what the SIP flows will do, I think it's always important to see structurally are the investments that you have made are sound or not. in terms of are you diversified enough into asset classes, are you diversified enough across various businesses that you're owning.
Okay. Kalpesh, would you like to add to that? Because, naturally the SIP flows will not be able to sustain at the current levels. In 2018 as well, the flows of the FIIs have turned handsomely negative. You have the concern which is piling up with respect to the currency day after day. The FII outflows have definitely been a disconcerting factor. What's your view on the SIP flow situation, and should investors be concerned?
When you say the SIP concept, I think it all amounts to the awareness which an individual investor would be having when deciding on the SIP amount. Please understand that when you say an SIP, it's a marginal amount of your monthly income which an individual is putting aside. It is not his entire wealth or his one asset class which he's allocating at one shot at a given point of time in the market. So an investor has very well understood, if he is handheld by a good advisor or if he has the good knowledge of what he is getting into, that an SIP is not going to disturb his actual net worth or his monthly cash flow. Because hypothetically, if a person was to earn 100 rupees per month, he is just setting aside 10% of that in a monthly allocation towards SIP. And every investor should understand that this he is doing it very well, understanding what his goals are, and it's going to brick by brick build on his corpus, and it will not affect his entire lifestyle or his entire profile at one shot. So come what may, whatever is the market condition, I think SIPs, and especially at this point of time, an SIP is a boon, because you are buying the actual stocks or the equities at rock bottom prices, and that too in an amount which is allocated by you. You're not going gung-ho or getting too excited about buying everything at a lower level. You are sticking to your fiscal discipline and buying it accordingly. So I think SIP is the way it has been built up over the last 6-7 years, and like what you said, Avan, rightly, it has neutralized the FII flows. I think that responsibility of every citizen who's investing in SIPs should be there, that we have to continue, and on the contrary, if your cash flow permits, increase the SIP amounts, whatever suits you.
Okay, that's the view coming in, and Kalpesh, as you said, and maybe that's why we're saying mutual funds sahi hai, because it really is the way to go when it comes to long-term returns as well. And it's often said that when it comes to long-term investing, no asset class can match the potential of equities. Raunak, I want to talk about opportunities in a fall like this. When it comes to mutual fund investing, do you think that as of now, if you're a fairly aggressive or a risky investor, I don't know how you'd put it, do you think that now would be an opportunity as well to build up a certain kind of portfolio via investing in SIPs?
Absolutely. So with each market drop that you see, you will also see some of the stocks falling, which sometimes some are legitimately falling because of some concerns in them, whereas when the market falls, other stocks also get hammered unnecessarily, where the long-term fundamentals might be in place, and if they were expensive in the past, they suddenly start becoming reasonably priced. I think that can give an opportunity for investors to start investing in those stocks where, for example, we were sitting on 26% cash. So that cash can help us be allocated now. I think next 1 year will be quite interesting in terms of which interesting investments we can make now.
All right, we're getting some